Today, I'm going to be talking about how I see opportunities in today's current economic situation that will allow you to double, triple, even 10 times your money. Let's hop into it. What's up, guys? It's Kai here. Welcome to my channel where we talk about entrepreneurship, money, finance, and mindset. If you like those type of videos, please hit the subscribe button and the notification bell. Today's economic situation is crazy. We got a pandemic going on. We got an oil war going on. People are quarantining themselves in their homes. People are spending less money, not going out to eat, causing our economy to crash. Stock markets are diving. We are living in historic times. The stock market has been hitting historic dives recently in the past few weeks. With all of this going on, it is currently creating amazing opportunities that are not normally there. Have you ever thought to yourself that, man, I wish I could have gone back to Apple before they started blowing up? Or, man, I wish I could have gotten into Amazon back in the day before they took off. I'm excited because I believe that very similar opportunities are presenting themselves today in today's current economic climate. Now, I'm not a financial advisor or a professional stock analyst. These are purely my opinions. But today I'll be going over opportunities that I see that have great potential to double, triple, maybe even 10 times your investment. Now, I do own some of these stock picks already, and I do plan on continuing to buy more. But if you stay to the end of the video, I explain to you how I believe these stocks will have the potential to multiply even further. Now, if you'd like to see if I actually do double, triple my money, please hit subscribe and the notification bell. And also, if I am taking huge losses, I also will post that progress. All right, now let's hop into the first pick, which is CCL, Carnival Cruise Lines. All right, guys, I know what you're thinking. Carnival Cruise Line, they are shutting down. They are getting hammered right now. People don't want to go on those petri dishes in the middle of the ocean, all because of this pandemic going on. And I understand that. But you have to look at the long term. And the long term is they have a proven business model. Sailing cruise ships around the world cost a lot of money. People spend a lot of money on cruise ships. People enjoying it. Yes, people aren't traveling now, but will they stop traveling forever? CCL, Carnival Cruise Ship, I believe they hold the largest sector of the cruise ship industry. They are the largest player. I do not believe that cruise ships are just going to disappear. Yes, I believe they're taking a loss right now because the cruise ships are down. But as this pandemic goes away and everybody gets back to spending money, cruise ships are going to start sailing again. So if you look at the long-term business model, sailing around the world or taking cruise ships have been increasing in popularity over the past few years. They have been consistently growing, and projections show that they will continue to grow in the future. So this business model will continue to be profitable. They have a solid uptrend for their long term of their business. Now, I'm not super technical on it, but let's just check out their analytics real quick. There's their net income. So if you look from 2016, $2.7 billion, $2.6 billion, $3.1 billion in 2018, 2019, $2.9 billion. Real consistent, solid numbers for their income. I'm sure 2020 they might show a loss, but solid business. I believe once they get back on their feet again, they'll continue to be making similar to these numbers or the same. Now they just have to weather this storm here. Now let's see what they have to weather this storm. So cash on hand right now, they have about $500 million. If you look at how much assets they have, 56 billion in assets. I'm sure that's all of their ships. Now, if you look at their long-term debt, which is $9.6 billion, like what they would owe to the banks. I believe they won't go bankrupt because if the bank bankrupts them to get back their $9 billion, they could try to liquidate some of their ships to pay off that debt. But what is the bank going to do with all those ships in today's current climate? Like, who's going to buy those ships? I'm thinking like it would be in the bank's best interest to loan more money to Carnival Cruise Lines, especially since the interest rates just dropped, to help them get through this tough times. And then when they get back on their feet, then everybody will be making money again. Now let's take a quick look at the charts. Boom, here's Carnival Cruise Line. This is a 5-year trend for Carnival Cruise Line. Now this is a 5-year trend. They seem pretty consistent trading average. Let's see, like around maybe like $53 average. They dropped all the way down here to like about $7.90. They just got a quick boost in the past couple of days. As of today, they're currently trading at $12. So let me just draw a couple quick lines here. A low line here, shoot that there. A general high line here. Let's shoot another line. So today's current level is right about here at $12. For example, if bought today, went here all the way up to This is like the bottom of where it was trading for like the past 5 years. You can see if it just went back to here, after all of this went, all the cruise ships start going again, this would be a 246% return on your money. This would triple your money. 100% return doubling. This is a 246 return on your money. Now fun, let's go to the anywhere in the middle here, you know, that's 300%, quadrupling your money anywhere in here. You go up to this top line, this is 5 times your money here. Now this is being optimistic. Now let's go for fun, go to the top line here where it traded at its highest in the past 5 years, which is $72.70. That would be almost 500% return on your money. That's 6 times your money that you'd make right there. This is crazy times. The value of their business went down 80% in the matter of 40 days. Hard to believe. I believe this is a panic sell-off. Yes, people see that people are not cruising, cruise ships are not going, but fundamentally the business, I believe that it is a solid business model and it will come back once people start traveling again and all of this fear and quarantine will pass us by. I believe things will get back to status quo here and Carnival will weather this storm and continue to be a profitable business in the long run. Now hopping into the next one is Boeing, which is a global powerhouse in aircraft manufacturing and a cornerstone of the U.S. economy. Okay, our next ticker symbol is BA, which stands for the Boeing Company, which is a huge global powerhouse in the aircraft manufacturing business. Now, aircrafts have been down due to travel bans and pandemics, but aircraft is not the only thing that Boeing makes. They had some problems in the past year with their 737 MAX, caused some problems, but they're also a huge part of the United States Defense Department. They make Apache helicopters, F-15s. The United States military is huge, and I believe the United States is not going to let Boeing fold. You know, not only in defense contracts, they also have space contracts. They work with NASA, providing parts for the space station, and they also service their technical parts also. So they have a huge business that spans across multiple sectors worth trillions of dollars. Now, same thing, Boeing has been around for a while, a huge part of the United States economy. Let's look at their financials here. If you look at Boeing, Boeing also has dropped nearly 80% within the past couple months. Quickly looking at their financials here, their net income, you know, they made 4.8 billion, 1.8 billion, 10.4 billion. This past year, they took a loss here. I would say due to their incidences with the 737 MAX, having to fix those issues. I believe they'll still be profitable providing aircrafts in the future, especially towards our government and towards space travel. I believe currently they're asking the government to bail them out, and I believe the government will. Now let's go ahead and look at their charts here. If I do the same thing and I just draw some support lines here for a low support line, for a resistance line here. This is just for the fun of super high. See potential there. So if you start from the $96 here, bring it up to this support line to $300, that's a 218% gain. That's tripling your money right there. If it just went back to where it was trading for the previous 3 years, that's tripling your money. If it went back to the higher side, it's close to, that's 300%. It's quadrupling your investment there. Just for fun, if it ever does make it back to the top, 365%. Crazy returns. Boeing is a huge company. I don't believe that they'll go under and totally go bankrupt. I don't believe the US government will allow them to go bankrupt. They got their hands in too many important sectors that they specialize in and that they're a huge part of. And the next one up here is stock ticker PLAY, Play, which is Dave & Buster's. I know it's a little smaller one, but hear me out on this one. Now, Dave & Buster's business model is a profitable business model. I love to go to Dave & Buster's, eat food, play games. But most importantly, they have a profitable business model. So, of course, they're having hard times now, especially with all of these quarantine, social distancing, people stay in their homes, restaurants closing. So, of course, they're going to have a hard time going now. But same thing, they've dropped 80% in the past 2 months. I don't believe their whole business got devalued 80% in 2 months. I believe that is a panic sell-off. Let's look at their financials here. They're a smaller company compared to Boeing and Carnival Cruises, but they make consistent profits. 90 million in 2017, 120 million in 2018, 117 million in 2019. Pretty consistent earnings over the years. This one, you have massive potential of multiplying your money, but they are a smaller business. They might not be able to weather the storm as much as the bigger companies. 21 million on hand to try to weather this storm. This one's kind of riding on how long is everything going to be shut down? How long will it take for them to get running again, because once everything starts running again, their profitable business model will kick in and everything will be running status quo. Well, I believe people are not just going to be quarantined in their house for the rest of their lives, but how long can Dave and Buster's weather this storm? So that'll be the big one. Let's go look at the charts here and see. This is a 5-year trend on Dave and Buster's. It hit a low of $4.61. Currently is trading around $7.70. I'm thinking statistically it should get at least back up to somewhere on this point here. Draw a resistance line here. And then for fun, let's go for the high. Now, if you go from today's prices at $7 and you go all the way up to this bottom price, 380% return on your money, almost quadrupling your investment. Up to the high, 600%. 600% on your money. That is crazy. And then for fun, let's go to the top. 800%. 9 times your investment. This is almost like having a time machine. Dave and Buster's stock has never been this low. I believe they far back as 2014, they were still trading at about $14 a share. I believe this is a crazy opportunity. I have some Dave and Buster's stocks now. I'll be watching them, where they go, be keeping an eye on them, and I might be dropping some more on them in the future. Next one coming up is another one in the travel industry, which is totally getting hammered right now, which is Delta Airlines, ticker symbol DAL. All right, next one we're talking about is DAL, Delta Airlines, one of the U.S. largest airline companies. Of course, they are getting hammered due to the travel ban. Airplanes are down, flights are not full. They're taking a beating right now in profits. They are not making any profits. Nobody wants to fly anywhere due to the pandemic. But if you look at the long term, that's the theme here, long-term business model. They have a proven business model. Once all of this stuff goes away, I believe people are not going to stop flying. There needs to be airlines there, and Delta is one of the largest airlines currently, and I believe one of the better airlines personally. And I believe that they'll be there in the long run, and they'll continue to make profit. Same thing, let's look at their financials. Not a doubt. Consistent income throughout the year. 4.3 billion, 3.5 billion, 3.9 billion, 4.7 billion. Of course, I believe they'll take a hit in 2020 for a bit due to all the things going around right now with oil prices. But with all of the people not flying, of course, it's going to do some damage. But they dropped 65% within the past 2 months. Currently, they're trading at $21.30. To get those kind of prices, you'd have to go all the way back to 2013. Let's look at their 5-year trend here. Let's draw some support lines where they're going here. Let's draw a resistance line hitting these top. Let's check out some possible returns we could be getting with Delta. Starting at their 21, if we go to this bottom support line here, 130% return on your money. That's doubling your money there. Going up to this top line here, 180%. Now, I have a little bit more confidence in Delta because, like I said, they're an airline. They're one of the United States' bigger airlines, and people are not going to stop flying in the long run. There needs to be airlines in the world. So I believe once all of these things pass by, airline companies, especially Delta, will go back to business as usual and continuing with their profitable business model and continuing to make money. Up next is a stock in the oil industry affected by this oil war, which is CVX, Chevron. Coming in next is CVX, Chevron stock. Now, Chevron is one of the United States' most largest oil and gas companies, but they've been taking a hit due to the current economic crisis and the current crude war that's going on right now. But all in all, they are a solid stock. They're known to consistently give out dividends. They're a solid business model. They've been consistently profitable throughout the years, with exception of this 2016 here. I believe they were building one of their projects that year, so they were spending more money. But Chevron's not going anywhere. Currently, they didn't take as much of a drop. They took like a 50% drop, 50-60% drop within the past couple months. But they have a strong dividend. And on this list, I believe they're one of the more safer plays. So Chevron, I believe they can weather this storm. They got $5.6 billion cash on hand to weather this storm. Crude oil prices are not going to stay this low. Crude oil prices will go up. People get out of their houses, start driving again. Chevron is a 135-year-old company, and I believe they are not going anywhere in the future. Out of this list, I believe Chevron is one of the more safer plays personally. Let's take a look at their 5-year trend here. Pretty consistent. Same thing. Let's draw some support lines here, resistance lines here. See what kind of percentages we're working with. Currently trading at $59. Hop all the way up to here. If it comes back up to the bottom here, 86% return on your money. Like I said, I think this is one of the safer plays. I believe this one is highly likely almost doubling your money. You go up to here, anywhere in this range here is 100% doubling your money. Like I said, Chevron is a 135-year-old company. I believe they're not going to go anywhere. Prices has not been this low. You have to go all the way back to 2015. This is like a 15-year low. 15-year. You have the opportunity right now to hop in a time machine, go 15 years back, buy this stock, and then take all of this growth when it comes back up. Amazing times right now. This next pick has been getting a lot of exposure recently and has exploded in the past few months. Ticker symbol TSLA, Tesla. Okay, now last on this list is this company has been exploding for a while now. It's just been exploding on its own, not due to any of these current market situations here. But let's just take a look at from just a few months ago, back in October, all the way to its peak, 270% gain. Tesla exploded, went from $300s all the way into the mid 900s, and it did that prior to any of this. And then it took a huge tumble with everything else with this crash. But they're touted as being the future here. So they were exploding before this market crash happened. They're the leader in electronic cars. Their cars are awesome. They're leading the electronic vehicle revolution. Their cars are most cost efficient now. So with all of these economic hard times, financially, these cars are the most efficient, cost-effective cars, dealing with maintenance, fueling in the long run. Tesla has a bright outlook to the future. They don't pay any costs in advertising. They're opening new gigafactories. They're offering their new insurance. They're launching their solar roofing. And in the future, really, there is no other electronic vehicle to challenge Tesla. They have their electronics charging stations, infrastructure set up throughout the United States, throughout Europe. That's a lot of catching up anybody else would want to do if they wanted to even compete with Tesla in this market. They're sitting with a lot of cash on hand currently as they're delivering their Model 3s, and the future is just looking very bright. Even prior to this whole pandemic and oil war and stock crash, there's companies that gave the evaluation of Tesla that in like 2025 they should be anywhere from $700 to $4,000. Some evaluations went all the way up to $7,000 by 2025. So that in its own, I mean, base it off of what Tesla is currently trading at $427. I mean, even if it went up to the low projected rate of $700, or even if it went back up to where it was prior to this crash at $900, you're easily doubling your money. But if it went up to where analysts believe it'll go up to, you're multiplying your investment multiple times over. So Tesla's an exciting one. I'm watching Tesla. They're the leader in their field. Some say this is like hopping in on the Apple iPhone when it was first launched. The Apple iPhone was first launched back in like 2007, 2008, before that housing crash. And Apple continued to pick up steam right until current day. So like now Tesla's just launched right before, they're picking up steam right before this crash. I'm thinking they're just going to continue steam as electronic vehicles will be the way of the future, and they will just continue to take off from here on out. Now, I did say if you stay to the end of the video, I would come up with some insight on how I believe you could make even more money. Now, check this out. Now, I do plan on investing in all of these stocks on my own, but here's why I haven't gone full bore 100% in all of these right now. So, I mean, people are worried right now that the market is crashing. And yes, we have been taking historical crashes per day in the stock market in the past week. But if you compare it to the stock market crashes in the past, so if you look at 1929 here, it went down close to 89%. 1987, 31%. The tech bubble in 2000 went down 34%. The housing crash, the housing bubble in 2008 went down 49%. Currently, this corona crash, they're calling it here, only went down 28% so far. If you look at the months, it took 34 months, 3 months, 43 months. In 2008, 16 months to hit all of these lows that they did. Currently, the market has only been in this crash for 1 month, and we're down 30%. So I believe there's a lot more ways for it to go down. 1 month, even if you went for another 3 months or so, I believe it'll go a lot more lower, maybe like 40, 50%, possibly even lower. So I'm kind of waiting to see how low it will go. Parts of the country are currently being shut down, and more cities are still being shut down from day to day and those are going to continue to have a negative effect on the stock market. I think it's going to be a while before people start to travel again. So I'm going to keep an eye out on all of that, especially with my Delta purchases, Boeing and the Carnival Cruise. I'll be keeping an eye out on Dave and Busters to see when people can go back out to restaurants. But I don't believe that we are at the bottom now, and I believe that it'll stop dropping. But on the bright side, I believe that it'll still that just makes the opportunity that much better when we come out of this hole. To give even more hope, times of despair like this chart shows the bull market when it's going up and the bear market when it drops. If you look back to 1927, the stock market dropped 83% here. It shows an 83% drop right here. But if you look at the following years, it continued to run up for 815%. This is the historical performance of the S&P 500 index. All the way into more current times, dot-com bubble dropped over here for 44%, but let's look at the years after. Up, dropped with the housing bubble here, 50%, continued to rise 350%. After bear markets and when the stock market crashes, there's long runs of profitability. 845% run here, 816% run here. So we're taking a dive now, but if you look at history over the past 100 years, we'll always return way stronger. So this is an exciting time for me. Opportunities are everywhere. All right, guys, thanks for watching the video. I hope you liked the video. Please comment on what you think of these picks. I understand that they're kind of crazy. They may seem outlandish, but let me know what you think if you plan on investing in any of these stocks. If you found this video helpful or entertaining, please smash that like button. Don't forget to subscribe, and I'll see you in the next video.